and how to trade it. Alan Nuckman is joining, Chief Market Strategist at Agora Financial. So Alan, I'm not going to ask you to jump on the home builder safety trade because I know you're a technical guy, but these technicals are getting slammed today. So how are you responding? Because I know we for VIX. So what are we doing today now that we're getting finally a sell-off?
So we got this opening low. Now let's see if this holds. As a trader, we have what we call the 1 hour rule. Let's see where we are after 1 hour of trading. If we've attempted to take out that low again, we're down at 1 1/3%, 1 1/2% right now. That's nothing. We've been patiently waiting for a pullback for the longest time. People will say, oh, I want to buy X stock, but I need to find it lower. Let's see if people step up now. Away from where we were in October when we hit 20. So even though we've seen some firmness in the VIX, it's nothing catastrophic right now.
Yeah, all right. So the 12 held for VIX at the moment for a virus for the year. So now we see if it manifests itself into something longer lasting. But the trade you're looking at today is in gold and in miners. So is this a way to basically get some of that risk off bid with?
Well, I think it's really technical, again, with all the markets I look at. For me, it's about price and what was important today that, even though you saw a headline 500 points down on the Dow, again, that's a very small percentage term. So looking at the gold market, come back and find a base at around the 1550 level. The way I'm looking to play this is with NUGT, which is the gold miners ETF. Now, this is a ETF that's been trading between 25 and 45.
It's 3 times levered.
It's a positive here. We'll get into that in a second. So you're buying limited risk options. So you've got obviously leverage on leverage here, which is great with limited risk because whatever you pay in premium, that's your maximum risk. So what I'm looking for is this. So it should make an attempt on that 45 level here. I'm looking at a 6-week option, the NUGT, the March 6th. It's a weekly option, a relatively short-term play here, something can happen in the next couple of weeks. The $32 call is trading about for about $4.50. It's a couple dollars in the money. We're at 34.5 right now. So the break even on this is a couple dollars higher. Again, 6 weeks at time. So I always balance the time and the strike to give me that optimum probability and percentages. So if we could see NUGT attempt to go to those last highs that we saw at 45, this option would gain 200%.
So you now basically saying, all right, market's coming under pressure. Look to where there's new strength here. You're still not going so far to get short stocks, and you're not dabbling in that realm. But this is kind of a different way to get exposed to the same idea, though, which is weakness and risk, strength and risk off.
And really, it's about money flow. And even with stocks at their all-time highs, people were looking for other avenues that had, some probability to play some catch-up. And the gold market is just that. We've been patiently, like I said, waiting and waiting and waiting for the stock market to pull back. Now we have to see how it reacts. And as it stands right now, we made all-time highs just Friday in tech and last week in the S&P as well. So it's been an extended move. And I think there's some value in going into some sectors and stocks that haven't participated in the rally, and that's what you're seeing, this money flow into other areas because people get, I guess it's acrophobia, fear of heights, and that's essentially what we have. We've overcome issues time and time again. We've seen it in Ebola, we've seen it in SARS, and the markets have bounced back every time.
All right, and with that said, the gold miners actually are not at the elevation as the commodity either, so you don't have to bet on successive new highs here. The miners haven't gotten to where the commodity is, so on the chart, then I guess the interpretation would be a little bit more room to run, just judging by the commodity, which has already broken out back to 7-year highs.
And if nothing happens in NUGT the next couple of weeks, with about 3 weeks left of time, I'll look to exit the position, and my time value decay will be absolutely minimal because it's an in-the-money option, and it still has that chance. So again, it's a probability play, but I'm not looking to hold it all the way to expiration, even though I can, because I'm just looking for what's already in the money to go further in the money. Let's see how it pushes above 35. When we get above 35 on a weekly basis, then it should be up and away in NUGT and in gold.
All right, Alan Nuckman, like it, good stuff here, Chief Market Strategist.